The dollar index is rebounding. Or is it? In tonight's video, we're going to take a look at both sides of the trade on this asset. We're going to look at a couple other dollar major pairs to see if there is a trade staring us in the face. Stay tuned. What is up, traders? My name is Heath and this is Trade Talk. So we're going to start off here with the DXY index. You can see that I have the daily chart pulled up. I have a longer term downtrend line coming from back in March when we had the scare, and I essentially tacked it to this high. Now if you look closely, you can see that this high did run through it and pierce it. However, we got a major rejection there, so I didn't change the trend line around. You can see that we have found what looks to be like support down here. This line right here at 89.770, I got from over here from a longer term price structure level from this bearish candle that was put in on April the 16th back in 2018. All right, so that is kind of what held as support. It didn't stop price automatically. As you can see, we did get a couple closures down below that level and a deeper push, but we did come up out of there pretty strong. Now going forward, I just want to point out the obvious. Currently, we have what is called a shooting star reversal pattern on the chart. Basically, what you need to have a complete technical shooting star formation is you need to have a strong bullish candle, you need to have a doji, and then you have to have a bearish candle that takes out at least the midpoint price of the bullish candle. And it has to close below that midpoint price. All right. And you can see currently this white line almost delineates that. Not to exact specs, but it's almost like it's very close. And we are currently looking like we are going to close below that. So this does meet the criteria for a technical formation called the shooting star. Now, this does have bearish tendencies. In other words, bears will be looking at this as a reversal pattern, and they will be looking to short any pops in price. So if price comes up, anywhere up in this area around 90.61, they're going to be looking to enter that short. Now, I have the opening price of this bearish candle marked as a level to watch. We did come down and test it, and we are currently trading below that level. So that also meets a little bit of weakness. All right. But I want to make this clear. All right. This is not technically a reversal yet. All right. It does have the makings of one, but let's go down into a smaller time frame chart here. Let's go with the 8-hour. Let me line that up there. Beautiful. Let me put it there. All right. So as you can see, we are currently testing this trend line right now. All right. So if you get a nice closure below that, then a retest of that could be met with sellers intending to short this market down lower. However, this is also a good spot to look for higher low support. As you can see with this market structure level here, this swing high before price shot up out of there, you almost had a perfect test of that line. All right, so that would be your near-term support. All right, so this has to hold if dollar bulls are going to remain in control of the market. Now, what happens a lot of times is so many people are short the dollar right now. Essentially, if the dollar turns around and starts making higher highs, you will get nice big squeezes out of the position because there are so many traders that are short this asset. So when price turns around, it can absolutely cause a short squeeze when it starts pushing people out of the market, and essentially meaning the dollar could run higher. So let's go into a few other pairs to look how we could hedge against this. So currently I have this on a daily time frame. I have this bullish candles opening price marked right here, and that level is at 1.21512. All right, that would be in the first area to look for a resistance test. We did kind of almost get that on this push here, but you can see we did not get all the way to it. All right, so let's go down into a lower time frame chart and see if we can't find a better level to operate with. All right, so we cannot. However, if I take this candle down here to mark this swing low here, you can see that we did push up above that and closed an 8-hour candle. Let me get rid of this line. You can see we did push up above that and closed an 8-hour candle. That level is 1.21198. Today's test in the New York session, we pushed down, and so far we have rejected, and we are making our way higher. Now, this trend line that you see here is it's not a very steep parabolic down trend line, but it is a semi-steep line. We did break above that. What does that mean? Well, technically means that we are no longer bearish to this extent. In other words, we are no longer as bearish as we were. We have broken above that trend line. You can see here we couldn't do it, and we couldn't do it here either. So that trend line did have merit until now. So moving forward, that line is going to be gone, and I'm going to find some levels real quick. This is going to be your first area of resistance at 1.22079 on an 8-hour chart. Obviously, once you clear this swing high here, if you get that clear, you're going to be testing 1.22079. We have a morning star formation on the Euro USD, which is to be expected because it is pretty correlated to the inverse side. Now, this white line is almost the midpoint of this bearish candle, and you can see we did close a daily above that. So that indicates that this is going to be looked at with bullish intentions. Bullish people or bulls are going to be look for a possible pullback in price and look for structure areas on a lower time frame chart to get long this. All right. But obviously the shorts think that this is just a pullback to get short against. And they both have merit because, like I said, you still have not tested this first area that's going to be resistance at 1.21512. All right. So let's go look at pound dollar real quick. All right, pound dollar. All right, we're going to start from scratch. All right, so you have essentially the same thing. However, you have your morning star formation here. However, you did not close today's candle to the midpoint of this candle. All right, and you are currently testing this market structure level here at 1.36400. You are testing that. So this does appear to be weaker than the euro. So if you want to look at this market in terms of taking a short position because you assume the dollar is going to continue its bullish pop, then this might be a pair you could look at to do so, simply because it is not quite as strong as the euro, but I have a better pair to look at that we will look at after this. So currently we are testing this area as resistance. All right, if we go down to an 8-hour, you can see that it would be the opening price of this last bearish candle before you had this bullish pop. So that coincides with the daily level very well, which just gives me more emphasis on this level, and that level is 1.36400. So essentially what you can look for is, if you get a breakout of this level, look for price to retest it from the above side, and then look for failure to get back below, and that would be a pretty good spot to look for bullish plays. And you could target this high right here at 1.37106. And let's see what kind of a risk to reward we would be looking at. You would be looking at close to a 66 pip move to the upside. All right. However, we do need price to move up and then come back and retest this from the other side. So let's go check out an hourly chart. So we have closed one hourly candle above that line, and we have already tested it currently on this candle now, and so far are holding. All right. So this is what you would want to see if you are going to be bullish on this pair. If you think that this is weaker than the euro and you want to look to see this roll over and catch a short, then you do definitely not want to see a closure, or you don't want to see price keep migrating away from this level at 1.36400. All right, because if it does, then that could mean that the bulls are in control of this market and the bears are not. If the bears are in control of this market, I would like to see it start to roll over. All right, but since it is not, you have to kind of, weigh out the pros and cons. There is a way to play this dollar pop in price, and you can do it simply by shorting the euro and longing the pound, or you could long the euro and short the pound. All right, that basically gives you somewhat of a hedge. Now, your profit potential is not as large, obviously, because whichever one you get stopped out of, you will lose whatever your risk percent is. But if you're right on the other one, which you should be, then if you could get a nice 1 or 2% move out of that deal, you just made a profitable trade. All right. But even though the pound is weaker than the euro, I like Aussie dollar better. All right. Because you can clearly see the weakness in the Aussie dollar. Let me get rid of some of these old lines. And we have a bearish target right here at 0.76426 for the short side of this asset. Now we are currently testing this area right now, and that area is 0.77096. So this could be looked at as a play currently, or sometime after the Asian session opens. It has not opened yet. You have 1 hour for that to happen, but this could be an area to look to get short, and you even have a market structure high level up here to put your stop against and a target down here. So if you put this up as a short position, let's just use this line as a reference. Let's bring our stop down to just above that high. Let's bring our target down just to this low, and you got a 3.9 risk to reward if this trade works out. All right. So I like the short side of the euro to play for dollar strength. If the dollar is going to continue its little bullish pop it's had, if it's going to go on a short squeeze, I like this pair better to get short on. All right. Because that means I'm bullish the dollar. I'm not necessarily short the Aussie. I'm just bullish the dollar. But since paired with the dollar, the Aussie is showing way more weakness than the euro or than the pound is, this looks like the best candidate, in my opinion, to look to do that. So what you could simply do is you could take a trade on this short tonight, put your stop above there, and then go back into the euro since it's the strongest of the three, and look to take this area long, and then look for a valid area to put a stop loss. Now, if you want to trade this the c.t.m method, the way to do it would be wait for this 8-hour candle to push up above, preferably up above this first area of resistance at 1.21512. Once you take out the high of this bearish candle, though, that is the c.t.m entry, because you have a move up and you have found support. With this close of this bearish candle, it essentially tested the midpoint range of this bullish candle and then closed higher. And now you have a bullish candle that is open and trying to move higher. So that's just the way of looking at it. You don't want to, if you put your stop all the way down here, that means you're going to have a really big range as far as your risk to reward potential. That means you would have to, just to get a 1 to 2, you would have to have price get all the way up to, let's see where that went, roughly 1.23018. And that's just for a 1 to 2 trade. So that's why I go into smaller time frame area or smaller time frame charts and look for areas to possibly short or go long against. That way it makes your risk to reward a lot better. But you do get stopped out a lot more when you do it like that. So when your stops are less wide than they should be, obviously you're going to get stopped out just from the price playing around a specific level. And you are in the middle of two areas. Remember that 1.21512 is a daily market structure swing low. All right. So that is going to offer up some kind of resistance. I just don't see price just blasting through there. However, if it does, you could look to get long on a retest of that level and then ultimately target this high here. And that high is 1.22229. All right. And that's just simply the high of this bearish candle. That would give you a pretty good risk to reward. And you could take 2/3 of your position off, leave 1/3 on, just in case this wants to pull back. Even though, not even though, nothing. It is still structured to the bullish side. Remember the trend lines. that I had on, you have not broken any main uptrending line to basically say this is no longer bullish. You have to take out market structure levels and possibly trend lines to be able to say, yeah, this market's turned around. You know what I mean? You can't say that yet. So the real play on this is to look for bullish opportunities. So that's all I got for you guys tonight. I just wanted to come out and say that because we are being shown something on the charts, and it's very important that you understand that technical analysis isn't 100% correct, and it's just analyzing data. And as a technical analyst, you have to look at the charts, and then you have to put a little bit of context behind your trade idea. So what right now the context of the markets is, to me, it is simply saying that we have an opportunity looking at us in the face. We are either going to roll over on the dollar and continue a bearish trend, or we are going to start a short squeeze on the dollar, which either way is fine with us because we're traders and we don't mind shorting or longing these assets. So that's just a little way you could do it. This is not financial advice, obviously. So if you do say get short on Aussie and go long on Euro and get stopped out of both of those trades, it's not my fault. So just keep that in mind, guys. And with that, I'll catch you on the next video. Oh, wait, real quick. I did take a short on NZD yen today and I got stopped out. I lost 1%. But then I got short on this right here. Essentially, what I was looking at was we were moving in this range here, and this market structure, or this 5 minute candle, is the one I was watching. We did get closures above that, as you can see, but then we traded away. So once price came back up into that area and showed a willingness to trade away, when we came down and took out this candle's opening price, I got short on a retest. My entry was right here at 1.26 or 126.118, and my stop was just above this high, and that level was 126.166, and that was a 4.87 trade. And I did exit the full position because I was looking at that dollar index, and I was looking for to see where basically the daily closed on the dollar today. Basically, that give me to give me an advantage, so to speak. So as you can see, this thing has been trading up. It may turn around. I don't know. But I made a nice little 3.5% or 4.5% on that trade, minus the 1% I lost on the New Zealand yen trade that I put out this morning. So with all that said, guys, you guys have a great night. Happy trading.